Michael Burry has been dropping numerous predictions as regards the present economy. He believes we're about to experience one of the most shocking crises and that the world is about to wake up soon. Indeed, his predictions have been coming true, and the worst collapse in decades is now started manifesting. The current chart has left many in a shocking situation. Just like Burry says, this is indeed the start of what we can call a much more terrifying crash. According to the World Investor, we're not even close to what we're to expect. Just like what happened to the economy in 2008, we should expect more to come. Even if we don't talk about the current inflation, what about the massive financial collapse prediction we might encounter very soon? It's no longer news that Michael Burry has sold almost all of his stocks for these three reasons. But what does he see? How does he know these things? You will be shocked at what he has to say. Well, that's what brings us here again. Welcome! In this video, we'll look at Michael Burry's future predictions regarding this financial crisis. So, watch this video to the end because there will be much to cover. Also, remember to subscribe to our channel and click the notifications icon so you can stay updated with our videos. Alright, let's get started. If you're wondering why Burry claims everyone will be terrified, the first reason is that inflation is on the verge of returning in a frightening manner. The Federal Reserve is firm about raising interest rates to fight inflationary pressures. But just recently, the CPI has been decelerating. This means there is a slowness in inflation, and when inflation slows down, disinflation occurs. This has got people thinking that disinflation is a result of the Fed's rate hike. However, Burry believes that disinflation is just a result of human behavior and that inflation always appears in spikes. He said, when the spike is resolving, it won't be because of Biden or Powell. It will be because that is the essence, the nature of inflation. It resolves, fools people, and then comes back. When it comes back, neither the POTUS nor the Fed will take credit. So, after the first inflation spike, there will be a second, larger one. Understand that during the first inflationary crash, there is every tendency that the economy will collapse. As such, it makes the government begin to print more money again in order to save the economy, without the government knowing that inflation will come back growing again in a terrifying fashion. Goldman Sachs analysts said current market levels have only priced in a minor recession and warned that a sharper stock sell-off is still possible. Much of the valuation de-rating has been due to higher inflation this year. Unless bond yields start to decline and bufferizing equity risk premiums due to recession fears, equity valuation could decline further. The bank's strategists also predicted that corporate earnings might suffer in the year's second half due to higher costs and slowing consumer spending. Also, we should know that when there is an excess supply of goods and low consumer demand, prices are expected to drop rapidly. This is why the World Investor is hinting at an upcoming supply glut. What this means is a situation where retail stores meet much supply and less demand. So, something terrible might happen to the market when supply is more than demand. Due to this supply glut, retail stores need to start dropping prices by introducing mass sales. Burry also advises people a lot on investment. The problem with this is that when a business chain orders extra orders, there is every tendency for the supply to be magnified to unhealthy levels. The supply chain typically includes retailers, wholesalers, and manufacturers. However, the inflation was extremely high in June, and no bids whatsoever for mortgage-backed securities. This inflation means that there was practically no price that these purchasers were willing to pay for regarding mortgage-backed securities, and of course, they are considered bonds secured by home loans. Let's explain how CPI and GDP growth rates are correlated. When the CPI goes up, the gross domestic product also tends to go up before it crashes with the CPI. This tells us that if we have a price crash in the coming months, it will also severely affect the economy. And when the entire economy crashes, we can expect that certain people will be affected more than others. Now that we're currently in the largest margin bubble in history, margin has even become riskier than it was before as a result of alternative investments such as futures and options trading. Single stock option trading volumes have increased to record highs during the pandemic, and more people are trading options and stocks. Due to increased volatility from alternative investments, margin calls will easily happen. When one investor gets a margin call, the tendency for asset prices to drop as the broker sells their assets is high. This causes others to get margin calls, leading to lower prices and even more margin calls. Even if the United States survives this downturn, there is still the tendency to have a general slowdown that will knock the wind out of the economy's sails by late 2023. Michael Burry has always been criticized for only betting on crashes. But while he mainly predicts market crashes, his track record is perfect. This is why you should also believe him this time. And that's it for today, guys. If you enjoyed this video, do well to subscribe to our channel and give this video a like. Thanks for watching. See you in the next video.